Good afternoon, everybody. Welcome to our Short Verticals webcast. I'm Connie Hill. Happy that you have joined me here today. How would you like to be rewarded in a trade, even if the stock didn't do what you thought it was going to do? How cool would that be to be rewarded in that kind of scenario? Well, that's exactly what we do when we get together every week is we're trying to master short verticals. And that's one of the properties they have is being able to reward you even if you don't get it perfect. All right, so we'll get into the details of that here today. I am joined in the chat by Scott Thompson. Glad Scott's here. He will help answer questions maybe I can't quite get to, but I will keep my eye on the chat. And we do want to answer your questions, so go ahead, chat those in. Now, those of you listening to this on the archive, when you have questions, go ahead and type in your questions down in the comment section, because I go back and look at those every day and get your questions answered for you as well. Now, I hope you're following me on X. I'm Connie Hill CS. Scott Thompson is Scott Thompson CS. We'll post educational content, things we notice in the market or about stocks that we think you might find interesting, maybe because we found them interesting. All right, let's go through our quick disclosures and get on with our agenda for today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for educational and informational purposes. Don't consider it a recommendation. We will be using the Paper Money software application. This is what you download to your computer. It's the most robust version of Thinkorswim. Has lots of nice tools for options traders, which you probably are. So glad that we can do that. Investing involves risk, including the loss of principal. Past performance of any security or strategy does not guarantee future results or success. Short options can be assigned at any time up to the expiration, regardless of the in-the-money amount, even though the money amount in the money option has a higher probability of being assigned early. That's one thing that's different in paper money than your live account. Paper money will not assign early. So I try to point those out to you at times when there might be some cases when maybe a trade we're working on actually could have been assigned early. All right, keep that in mind as you're doing your paper trading. And typically we'll just talk a little bit about short verticals, some element of them. This is an intermediate level class. So I assume that you kind of are familiar with short verticals. You don't have to feel like you're the world's best expert in them, okay? But we'll make some assumptions as we talk about that. But I want everybody to be able to stay along, even if you're not super familiar with the strategy. We're always going to be placing example trades, and we've got a couple of trades that we're going to do a little bit of follow-up on here today. The aspect I wanted to talk about of short verticals is what are good candidates to use for short verticals. In this class, one thing we've been doing as part of our routine is having a watch list. It's kind of our go-to watch list that we use for all trades. They can be bullish, they can be bearish. And sometimes we'll use the same stocks. Maybe 1 month we use them bullishly, and a couple months later we're using them in a bearish example. Okay, so it's updating that list is one of the things we're going to go do today. So if you're newer to the class, and you haven't seen that process, I'll walk you through building that watch list. Okay, it's going to be one of the things we're going to look for. We want stocks that appear to be, if we're looking bullishly, like the market is right now, appear to be bullish or neutral. Right, that or neutral can be very important here. We always look for higher trading volumes. Typically, that'll lead us to stocks that have higher open interest and higher volume, and that's where we want to be trading. We want there to be what's called a narrow bid-ask spread, which means the stock doesn't have to move a whole lot in order for us to start being possibly profitable in a trade, because we don't have this big, huge, vast spread that we've got to cover before we start making money. All right. Scott has posted a watch list, a playlist out there, getting started with options. Yeah, if you're not familiar with this strategy, that's going to be a great place for you to refer to. Now, we're going to take a look at a couple of trades that have completed, and we're not going to spend that much time on them because I want to really get to rebuilding our watch list. But let's head over to Thinkorswim. It shouldn't be too far away. There we go. And let's come out here to our monitor tab. And let me clean this up just a little bit here. In our class, we've been keeping track of bullish short verticals and bearish short verticals. And right now, my carrot's open, but we don't have any trades in there anymore because ours have all gone to completion. Things don't always work out this particular way, but sometimes they do. Many times they do. And let's show you how a couple of these trades ended up that we have done recently. First one we're going to look at here is IBM. On IBM, we did a short call vertical on it. We brought in a credit of 60 cents. We did 7 contracts. We said, we'll be happy to buy this back. We'll be happy to close out the trade and maybe take in a little bit less money. If we can go close it out for 18 cents, let's do it. So we put that order in right when we placed the trade, and it ended up filling for us. The order went in on the 21st of August, and in the morning on the 26th, so about 5 trading days, it went ahead, it used that order, but we got filled at a little bit better price of 12 cents. Okay, so our net on this was 48 cents on 7 contracts. And this gave us about the neighborhood of $336, not counting commissions. Okay, so for a 5-day trade, is that worthwhile? Yeah, I think that's worthwhile. Let's go see what the stock did. I've got the chart marked up. And on the green oval is when we got in. We're actually looking bearish on this because you can see the previous trend had been more bearish. And it just kind of went sideways for a couple of days. And then that was all the time we needed in order to get filled on our trade. Sometimes that can happen. So on the day, the 26th is where I have that kind of golden oval. Lets us know we exited the trade successfully. And the reason we were able to get out of it is because we had an order sitting there that said, if you get to this point, execute the trade for me. We didn't have to worry about trying to catch it. And this is actually one of the scenarios when the stock did not do what we expected it to do. When we got in this trade, we were bearish on it. It was a short call vertical. We were expecting it to run into the 10-day moving average and drop down again. It was sitting right here at resistance. It went sideways, but you can see it just kind of waffled for a little bit of time, and then it actually started going the opposite direction. Now, we were out of the trade before that happened, okay? And that's why it can be really helpful for you to be able to lock in those profits, at least a portion of them, and just kind of like say, thank you, market, take the profits that were unrealized and move on to your next trade, okay? So that was IBM. The other trade we're going to look at, we'll just look at the chart here real quickly, and then we'll go look at the numbers, was Newmont Mining, NEM. Now, Newmont Mining, I'm going to kind of come in here. We've used this stock several times. It's been one of those stocks on our watch list, our go back to watch list that we're using week after week. And so you can see we've had a few different trades in it. The most recent trade was here. We got in on the 21st of August. And a week later, boom, 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 it actually did what we thought it would do. This one took a little bit longer, but it did reach our threshold. I think we had a 70% by the stock or by the option spread back. If we get 70% of the profits, we put that order in. It executed for us right there. A week later, that one we had 8 contracts on. Our net after it bought it back was it's 47 cents. So it was about $3.76 that we made on that trade, and we were in it for about 7 trading days. Okay, actually 7 calendar days is what it was. So you have to think of that. You say, well, are these little trades worth it? 336, 376. Well, in a week's time, we can see just those 2 little trades would have been nice to have in our account, have that grow, create that cash flow for us. Okay, not usually are these trades big winners. They're usually small ones, and these small ones, you get enough of them, man, they can add up and help you create, if you're trying to work for cash flow or building your account, they certainly do add up. Okay. Those are the two trades that we looked at. Now let's go refresh our watch list. Okay. We do want to find those liquid stocks. So I'm going to show you a methodology. This doesn't mean the only thing somebody could do. Okay. But for our class, this is what we're doing right now. In fact, I already have the scan built here because I was working with it before our class started. So we just have a couple of parameters here. We're looking for stocks that the last price is at least $40. Now you could go lower if you wanted to. Because we want to use this for both bullish and bearish opportunities, it's nice if the stocks have a little bit of room to pull back. Okay, so stocks that maybe are already really beaten down to 12 or 10 bucks, maybe there's not a lot of downside that they have left. But again, you could use whatever criteria you feel comfortable with. Then the second criteria is the average volume, and I just got it over the last 20 days. You get this from the filter that's called Study, and then we have this set to 2.5 million. Now, could you possibly find some things that aren't trading that much, that their activity is lower? Yeah, you could. But because we're trying to curate a watch list that we feel like, hey, this can be our go-to, we can use it for pretty much everything. If we see a nice setup that we like, then we want there to be the volume there already. Okay, well, we get back a decent number of stocks. Now, what we're looking for, we're going to do two different scans here. We're going to do a scan in and a penny increment options that we're going to intersect with. Both of these are public watch lists. Let's show you what that looks like when we do it. And let's do this. Let's clean this up. And I'm actually going to change it initially here. I'm going to combine, we're going to use the S&P public watch list, the S&P 500. That's a lot of stocks, right? S&P 500, usually bigger cap stocks that you might be familiar with, okay? And this intersect with penny increment option. You just come down to the public, go in through R, and then you see penny increment options. We select there. We're going to intersect those two public watch lists with our criteria we have here. Now, I put it to show us results of 200. We're not going to get back 200, okay? Today on this one, it looks like maybe about 104 is what we're going to get back. Now, we're going to save this as a fixed watch list. The scan isn't that difficult to recreate, but if you wanted to create it, go and do so. Make sure to save it, save the scan query, and then give it a good name. All right. On this one, I'm going to save the watch list. So we're going to go to this menu item right here, click on Save as Watch List. We're going to give it a good name. And the good name, I keep giving it every week or every time we do it, which is about once a month. I call it Short Verticals Class Watch List. Oh, actually, I'm not going to even put watch list. I put today's date, which is 9/11. Last time we did this was in first part of August. Okay, so I'm going to go 9/11. We're going to go ahead and put in today's date. No, we're not going to refresh this until we get to October. Okay, we're just going to keep using this list. We don't need to spend a lot of time searching. Okay, now we're going to come over here on our watch list, open it up. And we're going to go pull up that watch list called Short Verticals or SV Class. Oh, maybe I have to go to the next one here. SV Class 9/11/25. Okay, that's the first part of our watch list. Louise says, I can't do this in paper money. The study filter here, it is only available on your live side. So you may have to create this scan on your live side, go through the steps I'm going to show you, and then share that watch list so that you can bring it up in your paper money account. Okay, that's what you're going to have to do there. All right. That is a reminder. Yeah, these study filters don't work in paper. All right, next up is, well, we have the S&P 500 we're working with here, a subset of that. We're going to do that with the NASDAQ as well. There's a lot of stocks on the NASDAQ. So we're going to change our scan in here. We're going to come down to that public watch list called NASDAQ Composite. That's this NASDAQ comp. We're going to choose it. We're going to let it intersect with the penny increment options, which, I didn't say much about this. These are a list of stocks that are trading in penny increments, which means pretty small. They're not trading on 25-cent increments or 20-cent increments. They're trading in pennies. That gives us an idea that they're fairly liquid most of the time, and that there should be a lot of trading activity there because they're trading in something smaller than a nickel. They're trading at pennies. Okay. Now you can have more than one instance open in Thinkorswim at the same time. You're absolutely right. I have my demo account open here, and then if I wanted to, I could have my live account open as well on a Windows machine. It's a lot trickier on an Apple machine. Typically, unless you know how to jump through the hoops, you can only have one instance up if you're on an Apple. Okay. Let's go run our list. And you might want to take some notes here because this other step is going to be a little bit more detailed. Okay. I'm going to go ahead. I'm going to scan. Looks like we have about 57 results, and we want to combine those over to this watch list. Okay. There are going to be some duplicates. As we bring it over, the system's going to work it out for us so that we don't have duplicate entries on there. It'll just keep, one ticker symbol if it was on the original or if it's on this new list. Okay, what do we do here? Well, I'm going to have Microsoft Excel open here. And I'm going to come in here and I'm just going to open up a blank workbook so we know we're starting with nothing there. Okay, then what we're going to do is we come back and run this. We're going to come to this, actually, it's going to be up here, this menu item here. We're going to choose export. Okay, so this was back up here, export, and we're going to say to Microsoft Excel. Now a message comes up and it basically, this message says, hey, we're going to copy this to your clipboard. And your clipboard is your short-term memory. And so we're going to say, great, it's copied it to the short-term memory. We're going to go to that spreadsheet now, and we're going to paste the results into the spreadsheet. Okay, so I'm just going to go, let's just do Control V, which is paste. And you can see the information it's brought up. Now, we don't need all of this other information on it. The only thing we're going to use is the ticker symbols. So I'm going to come over here to my left. I'm highlighting these ticker symbols. I'm going to do a Control C for copy. Again, that's going to put it in the computer short-term memory. Then we're going to bring it into the watch list that we just barely created. So we're going to come to our watch list. We're going to say, you can do it a couple of ways here. We're going to do import. And then it says, okay, do you want to go to a file? We're not going to do a file. We're going to say paste symbols from the clipboard. That's that temporary memory. And then it's going to give us a choice. Well, do you want to replace the symbols here or do you just want to add? We're going to choose add to the current symbols. And then we're going to say, okay. And now we're going to have an updated watch list here that has not only the NASDAQ stocks on it, but the S&P 500 stocks that we're taking those subsets of. So this is a pretty decent sized watch list that we're going to use over the next few weeks now. Yeah, in Apple, it's Command V as opposed to Control V. Yes, absolutely. All right. Let's see. Yeah, Scott's helping out with a little bit of information there as well. Thank you, Scott. Appreciate that. Oh, Lewis says, yep, that worked when he went over to his live side, ran it. Then he was able to bring that over. Okay. Next step is we want to identify some new short verticals to be working with. We want some trades working in our account, okay? So I've, of course, pre-sorted this list and found stocks that look like they were moving. Now, you can see I've got a 1 month column here and a 1 and a 3 month column that's basically the percent change. How well have these stocks been moving, okay? Many of you have already got these scripts, but for those of you that don't have them, because we have new folks joining us all the time, I'm going to copy these scripts out to the chat. And I always have to remind you, the scripts are not guaranteed as to accuracy or timing. Okay, you're going to take that little URL, do them one at a time, copy the URL and to set up, open shared item, and then you're going to paste it right in here, and then you'll be able to preview and import. Okay, remember what you call it so you can go back to this watch list and bring it up. Okay, so that's what I call mine. That is what I find easier. Okay, 1 month and 3 months. Now, my process here, what do I do once I have this watch list and I go and look at it? Well, I'm just going to review the watch list, and many times I'll just sort it on today's move, the percent change. So these are not default columns that you have. You have to come in here and hit customize and pick the columns that you want to show up here. Okay, so I've already done that, and those are the 4 columns we're going to work with. Just wanted to show you my process here a little bit. He wants to know, does the scan functionality have a provision to pull up the NASDAQ plus the S&P 500 in one go? It doesn't, which is why I didn't show you how you could do it that way. I showed you a way around that so we could accomplish the same thing because, yeah, that functionality we can only scan in and intersect with. All right. When we want to use penny increment options. If we weren't using penny increment options, we could change that and do intersect with the NASDAQ. So that's a possibility, but I think this parameter here really does a lot of weeding for us, really helps us out. Okay, so good question. All right, next up. I filtered this. I went through it here already and found some opportunities that we're going to take a look at. We're going to pull up the charts. First candidate we're going to look at is DHI. Now, DHI, I've got a 10-period moving average typically on the chart. That's the blue one. And a red one is a 30-day moving average, which is more of an intermediate trend. And would love to see it going up in both. And this stock right now, this is a home builder. Man, notice how many times it's been bouncing off the 10-day moving average. It's just like delicious to look at. You see how that it just continues to follow that pattern? Now, it's not guaranteed it's going to continue in that pattern, but we're liking the trend that we're seeing here. And today, what do we have? Well, it's not the close of the day yet, but this is a trade above the high of the low day. The low day in the little pullback was just yesterday. And today it traded above it. It's still there, and it very well could close there and give us a hold. But right now, it's a trade above the high of the low day. So we're going to go in. We like that as an entry signal, right? Getting a little bounce off support. We would love that. On a short vertical, some people just like it to be at support. And sometimes they may not watch for it to bounce. Many times we'll look for a breakout. Okay, so there's lots of things we can be looking for. We're going to come down. We're going to use the October 17s. Even though they have some weeklies, they're not super liquid. Okay, so we're just going to stick with the October 17s here. We've got a delta column right here. And I love showing my open interest column. That's so helpful. So you make sure, hey, there's lots of contracts trading out there. You know, I'm kind of a stickler for that, right? We've got to have lots of open interest contracts. We want to be like a little fish in the sea of all the contracts. Now, many times we'll use a 30 to 40 something delta. We've got a 45, we've got a 34 and a 25, and sometimes we go down to the 20s. We're going to go with this one here, the 34. We're going to sell the 175 and buy the 170. Now, right now, this is giving us about $1.47 in credit. We always want to make sure the juice is worth the squeeze, right? We want to make sure that this is giving us a good enough return that we feel comfortable with. So we're going to just bring out our little calculator here, and let's calculate this. Now, it's a $5 wide spread. So we're going to take our $1.47, and we're going to divide it by 5 minus, it's a $1.50 now. This is even cleaner. We'll go for the $1.50. And then 5 minus $1.50 is $3.50. That's our max theoretical loss that we could incur. So $3.50 is our max potential loss. That's going to give us a theoretical return at options expiration of about 42%. So you can decide, is that good enough for you? For some people, you might go, oh, I want it a little higher, maybe more aggressive traders. Some people might say, oh, I'd like it a little lower. That could be the case, but for our purposes, we get a 30-something or 40-something% return. Usually we're pretty good with it in this class, so we're going to go ahead with this. Now, as part of our class rules, we can risk in our portfolio $1,500. So we're managing our risk every single trade. So if we can risk $1,500 per trade, and we know on this trade we'll be having a max theoretical loss of 350, we're going to divide that into it. That says we can do 4 contracts. Great. Going to continue to follow this process, and we're going to do 4 contracts here. See, it says that with housing sales falling, they're getting into the build to rent model. Oh, interesting to see a little bit of maybe news that might be helpful for us to know about some of the home builders and DHI. Yeah, as a home builder. Let's put in an opposite order here. Let's go buy it back when we get a chunk. When you get a chunk that you're happy with it, we want to just take our money and get out. We do not need to bleed every penny out of these trades, okay? It's kind of like toothpaste. Man, I will get everything out of the toothpaste container when it's toothpaste. But some traders find that that's maybe not the best way to trade verticals. It's like, man, get out most of the toothpaste and just be content to leave a few crumbs on the table and move on. Just lock in those gains. So let's create an opposite order here. We'll go back to our calculator. On this one, what if we were to say if we got 75%? If we got 75% of this one and 25% was left, let's see what that brings that up to. So 0.25 times, that was changed here a little bit. So we'll go with the 145 that it is now, was 150. We're going to buy it back for 36 cents. So we're just going to have this order sitting out there ready to go and let the system automate it for us, right? We're just going to let it sit out in our working orders. It gets to this price. We're going to let the system lock in that trade for us. We don't have to try to catch it. You can be out walking the dog. You can be out doing whatever you feel like. I'd say it's still good golfing weather for those of you that like to golf. All right. Now let's see what else might be on our watch list. Come back here, bring it up, go back to our charts. The next one here is actually Lennar. Not Lennar, we're not going to do Lennar, we're going to do Lowe's. It's not really a home builder, but man, do you find yourself going over to Lowe's and Home Depot a lot, right? For stuff for our homes. Yeah. And what is it doing here today? Looks like it too has been bouncing off this 10, being very responsive to it. So we might consider this a bounce off the 10-day moving average. We might see, oh, it looks like it could be possibly, if it closes there today, a close above the high of the low day. You know, we had this little run up. Some of you might even see a flag pattern there. Okay, there's a lot of things we could see in these charts, but basically it's pointing to some bullish action and some bullish signals that some traders like to get in on. So we're going to go with this bounce off support and hold, but it's a good enough size bounce. We're going to go with it. So we're going to head over to the trade tab. Again, weeklies, there's not a ton in the weeklies, so we're just going to focus on the monthlies. This October 17th. Go down my Delta column. Now, here we don't have as many choices here that might be comfortable for people, okay? This one has a 41 Delta. Some of you might go, oh, I get a little squeamish in the 40 Deltas. I really like a 30 Delta. Understand that. It drops down to a 22 Delta. So some of you might look at that and go, oh, usually a 22 Delta doesn't give me the percent return I really like, okay? Let's see how the numbers work out here with the 41 Delta. We can see there's plenty of open interest for the contracts we're going to be trading, which is just going to be a handful. So let's go ahead. We're going to put in sell vertical. And I'm going to go ahead. I'm going to lock this at 280, okay? Just to make the math simpler on my brain. Now this one's $10 wide, and we're saying our max theoretical gain here is going to be 280. Well, what would our max theoretical loss be in this case? Well, it's going to be 10 minus 280. Okay, so we're going to be looking at what? 720 here. So we're going to say 280 divided by 720. It's going to give us our percent return here, about 38%, which is actually fairly typical. Now, why is it maybe not super juicy, even though it's a 40 delta? I would say the reason it's not a super juicy premium is the implied volatility in here is pretty low. Sometimes people will navigate and say, oh, I like to do short verticals when the implied volatility is high, right? Because they're looking for that juicy premium. But there could be other people that say, you know, I'm really consistent with this strategy. It works well for me, whether we have high implied volatility or low implied volatility, and they're really comfortable with that mechanical process. And so they'd be okay with it. For our purposes here today, we're going to be just fine with it. Okay, so let's take our $1,500 and divide this by 780. How many contracts can we do? We can't quite do 2, so we're just going to do 1. All right, that's okay. Especially if you're in a smaller account and you have that confinement, it's all right. Just do 1 contract, not a problem. We're happy to take a base hit to help grow our account. Okay, we'll do a first trigger sequential. We'll put in the buyback order here. Just let the system do it for us, okay? If we get, let's say, 70% of 280, we'd have 30% left. So let's see what 30% left is. It says go buy it back at 84. Now, you don't have to use 84. You could use another value if you wanted. You know, some people might say, well, if I get half of it in 3 days, I'm going to take it. That's just fine, right? You get to decide where that threshold is that you're comfortable with. So we're saying we'll buy it back at 84 cents at 70%. We'll make this one a good till cancel here as well. And we're going to send that in. I will move it to our baskets of the bullish verticals and the bearish verticals. Let's see a question maybe here from John. Was talking about interest going down, which I think the market's kind of like crossing their fingers that we'll get a rate cut, right? Interest going down, it only affects short-term rates. Tariffs are still there. How is it going to impact home builder cost is going higher? You know, that's the big question mark, Jayton, is we don't know. We really have not seen the impact of the tariffs yet in a lot of areas of the market, okay? And so, you know, sometimes when they come out and they announce earnings, they're a little cautious. They say we might not know how tariffs are going to impact us, so they might give a more conservative estimate, okay? So we know that there will be ramifications throughout the market, through every sector, every industry group, some maybe more than others. All right. Now, how many of you are kind of using short put verticals or short call verticals as a meat and potatoes staple in your account of the trades you like to do? How many of you are getting to that point you're feeling pretty comfortable with that? Go ahead, let me know. Chat in. Okay. Yeah, see, it says, you know, if I can get 50%, I'll take it in a heartbeat. Boom, right? Gets 50%. You're like, we never know what the next day will bring or what later in the day will bring. Some people, yeah, if somebody gets 50% in a short number of days, man, they might be all over that. All right, Vic is getting here. John's getting there. Ricebird is getting there. That this can be just one of your staple go-to strategies. Yeah, Vic says yes. Susan, Lawrence, Debbie, Myron. That's fantastic, you guys. I hope if you're not one of those people that's not comfortable yet, that you'll take the opportunity to do some of these trades, these example trades in your paper money account. When you do, you get involved in it. You get to see what happens. You get to see what happens when things don't work out right. One question somebody asked last week that I wanted to touch on today because we didn't get to it the last time I taught, and this came in from Jack, and some of you may have this question as well, do you ever close a trade if it's going bad? The answer is absolutely we do. We just have had such a string of stocks going through that are hit our targets so nicely for us, but absolutely. And in the past, when we've had some sideways conditions or even bullish turning to bearish conditions, we've had to get into a different mode. We've had to go buy back some of those short options and hold on to the long one and let it run and help make up the deficit. So most definitely. I want to show you something. I hope you're all subscribers to the Trader Talks, to our podcasts, okay? It makes it really easy for you to find our content. One thing I wanted to point out to you is that we have some new bite-sized comment, which are smaller videos, right? Sometimes you're like, yeah, I've got 5 minutes. I'll sit through a 5 or 6 minute video, right? Let me learn something. And so we're producing some of these bite-sized contents. The latest one is what Ben did this week, explaining the difference between settlement periods of AM and PM. The other thing I want to point out for you, those that are getting comfortable with this strategy, something you might be interested in as far as working into your itinerary or your agenda, okay, of classes where we've just opened up a workshop for advanced option traders, okay? So I want to take you there. In your Schwab account, get logged in, go to Schwab Coaching. As it comes down here, we are going to look at in-person, actually on live webcasts and virtual workshops. Got in the right place over here on the left side, okay? And this is going to be in October, so I'm going to scroll down to the next calendar here. It's going to be October 20th. So starting here, we're going to have a virtual workshop of advanced option strategies. So you might want to get this on your calendar if you're like, yeah, I'm getting really good. I'm feeling comfortable with short verticals. Let's start mixing and matching short verticals with some other types of strategies that make multi-leg option strategies. All right. So wanted to let you know this. Now, Riceberg says, the scan that we did, could it be used for long call verticals? Quite honestly, I think you could use it for any type of option trade. The one exception for that might be the four-legged options. You'd really have to watch and make sure you're getting great liquidity in those options because you've got 4 legs to worry about. And so just you want to be careful. Okay, but you could use it for whatever strategy you might want. You could come in here, you could add another column that's volume. It'll pull up today's volume. And you could just maybe focus on ones that have like a ton of volume, right? If you're going to be looking for four-legged option strategies. All right, let's do one more example here before it's time for us to wrap up. I think we can get through this one pretty quick. Let's go with Gilead. I don't see Gilead on this front page here. They might be not as up as they were earlier today. We've used Gilead a few times in our webcasts for an example trade. Okay, let's zoom in on what's going on right now. It had a good earnings, popped up, gapped up, ran up to that 121-ish area, and then it pulled back. And what's it doing now? It bounced a couple days ago off of this diagonal support. Some people might have liked an entry there. What have we got right now? Well, we've got a 2-day pullback, and again, we've got another little hold. Close above the high of the low day, or a trade above the high of the low day, since we're not really closed yet. So might be seeing it as a bounce off the 10 and the 30. It's all of those. Okay, so some people might like that for a bullish entry. Again, we're going to go to the October 17 contracts. And looking here, look at the open interest. We've got thousands of contracts out there. That gives me a fuzzy, warm feeling in my heart when I see that kind of open interest. Okay, you can see the bid-ask spread. Here's 10 cents. Oh, that's just so delicious, right? We're going to sell a vertical. Bring that up. I'm going to go ahead and lock that in. That's actually a similar return to what we just calculated a few minutes ago. We're risking basically 350, 349 to be technically correct, to have a max theoretical gain of 151. That going to meet our rules? Yeah, on our last one, it was about a 40, it's going to be about like 42, 43% return. Yeah, so for our class and our purposes, we love that. So let's do the same thing. Let's put in a buyback order and let's figure out how many contracts we can do. We should do the same number of contracts, actually. I bet we're going to end up with 4 here. Okay, $1,500 is what we can risk on any trade we get into. Max theoretical loss here is 349, 5 minus the 151. And maybe I didn't clear things out here sufficiently. Let's try this again. Let's go 1,500 divided by 349. 4 contracts. We can do 4 contracts. I guess it was okay. I just wasn't sure on that. And we're going to make it a first trigger sequential. We're going to put in this opposite order and put into go buy it back. All right, let's go with 70% again. If we can get 70% of the 151, we'll only have 30% left. So we'll take 0.3 times 1.51. That says go buy it back up 45 cents. I think the other one was 42 cents, or it was right close. That might have been 46 cents. We're going to go here 42 cents, or 45 cents rather. Okay. We'll be content if we can get a good chunk of that. That would be over $1 credit if it did that for us for 4 contracts. So we're looking at, not including commissions, maybe possibly in the $400 neighborhood as far as that return. We'll hit confirm and send. This one I'm going to remember to send to our bull short verticals bucket and send it on its way. I'll make sure that we get filled on these orders here. Now, I didn't see this initially. I'm seeing it here right now. There is a survey that's been placed out into the chat. And you guys know from time to time, we like to get your feedback. We like to know your thoughts on how, in this case, this specific webcast has been for you today. It's super easy. 2 radio buttons. You just go plop, plop, picking the number from 1 to 10, what your feeling is. If you want to answer, there's 2 questions you can answer. We love to see what your feedback is on that. The other thing is, if you want to use that space to tell me something like, hey, I'm having a problem with this, or could we have a class on maybe something that's giving you a snag, go ahead and use that space for that as well, because I love to incorporate those kind of concerns and questions. I love to incorporate them into our sessions. Okay, so if you don't mind filling out that survey, I will read every single one of the answers. Scott will read every single one of the answers. In fact, Scott will see them before I see them in this case. All right. In any case, we appreciate your feedback. Okay, so we've got a few things for you to do. The survey on the way out. If this was helpful to you today, go ahead and hit the like button on the way out. That helps other people find the class. If you found it helpful and you think they might as well, give it a like so they can find it more easily. The YouTube algorithm will help us out there. And then if you're not a subscriber yet, just click that little button down in the bottom right-hand corner that says subscribe, so it makes it really easy to find our content. I want to see if there's any questions here that I need to wrap up with. Nancy says, is there a way to see the graph on the trade tab too? They're actually not on the trade tab, but what you could do is you could be on the chart tab and we could place a trade from here. And so we could come out here and say, well, that's just a sell custom. We could do a sell, but it's not as clean, okay? But what some people will do is they will use the gadget area. And what they'll do is they will put a quick graph as one of the gadgets. Like I've got the calculator here. If I were to switch that out, we could come down here and choose quick chart. You could have the chart over here on the side. So like if you got some things marked on it like I do, okay, you could see the little chart right there. That could be helpful for some people as well. All right, you guys, you've been great today. I appreciate your participation, your questions. Appreciate you being here today. I'm glad to see that a lot of you are finding this strategy to be really helpful to you. All right, Scott, thanks for helping us out in the chat. Scott's always very attentive, helps out so well there. We appreciate that. You guys, we're going to have a little break in our programming. Go get a snack and refresh your drink, and then come back for scripting studies with Mike Fairborn. He makes learning scripting so easy, and he has some really useful tools that he shares with you. So take a break, head on back. We'll see you here in about 15 minutes. Have a good afternoon, everyone. Bye-bye.